Welcome to the Market Alert for Tuesday, the 7th of February 2017. So yesterday, the market managing to stay above the 76% retracement as the market opened in the early hours of the 6th. You can see there we're just below a bit, and then the market sits all the way through. A bit of a dip down here at just before 9 a.m. and then eventually the market actually broke this support. You can see it was a support, and then traded down to the down to the 20,000. This is the red line here. The market then sideways, and then as soon as the market opened, drove back. We had a buy signal with the market closing above the 76% retracement there as well. No news out for this afternoon session, and you see the market just driving up, coming back, and then managing just to get up to the scalp. There was absolutely no effort, no energy, nothing involved in this. You can see by the length of time that it took to actually get up to this point, and that's why after this trade I sent a note out to say the market's got the 76% area to trade back to and sit on. The market broke below this again, but what's interesting here, you can see how this has become a resistance level now. Before, as in yesterday, we had it as a support. You see how the market's sitting on it, and now you can see how it's become a resistance level. So for this market to move higher, we'll just have a look at the daily chart in more detail. The market's got to get back above this in order to actually move higher. It's as simple as that. So sideways, and that's because we don't have a lot of news. Let's just have a look here what we've got here. 3 p.m. Jolts job openings, medium impact news item. Tuesdays can be difficult because everything or news from the weekend is factored in on Monday, and therefore it can generally be sideways, so be warned. So again, it'll probably be a case of what we saw yesterday. You'll get a trade within the first couple of hours, and then it'll probably go into a sideways move. But watch the 76% retracement area there. That at the moment is and has become a resistance area. Markets closed above it on Friday and then back below it during yesterday, which is not strictly true because obviously this is accounting for the electronic session as well, but I'll show you the real picture, as it were, in just a moment. So we got that as well. And then implied volatility, this is at 934. You can see just sideways with this as well. We're back below the 10%, and we have got a big correction coming. It's just a matter you can't actually state the date. We're into the third week of Trump's presidency, so let's see how things start to unfold. It's certainly becoming normal to see executive orders being signed, and I think he's still got a couple of more people to actually appoint yet. But as we go forward, it's going to become unsustainable. There's no doubts about that. Not expecting a massive crash, but because the Federal Reserve is still in place, Yellen's still there, and also Trump has someone from Goldman Sachs called Munchin, who apparently is the man behind all of the market manipulation computers, all the programming behind it and the design. So we may get corrections, but at this stage it doesn't look like we're going to get a massive crash until it's becomes untenable. I think that's probably what it's going to be. But the first 100 days of his presidency, it's likely that we're going to just see corrections like we had last week, and then moving back and then trading sideways, then a bigger correction, and so on and so forth. If we have a look at the real Dow figures, as I call them, in this piece of software, you can see we've still got distribution of stocks. Last week the volume was very high again for the whole of last week, well, since December. So you can see we're still getting this sideways move and lots of volume coming in here. So there's distribution still going on, and maybe because this is still going on, we've not seen the market actually fall apart yet. The volume is still large. We'll have to see a drop off in this first before we see the market move back to the downside. So we've got pointers that we can look at in order to try and sort of second guess what's actually coming. I know there's a correction coming because of the implied volatility. It's never failed since 1994, but we can't give a date and time, as I keep saying, because there's nothing that will actually pinpoint to the day, apart from, you know, we've got this situation here where the market now has it sold. We had a bit of a down move there, market rallied back, we had a bit of a down move there, and now we're struggling with the 76% retracement. We're below that this morning already on the electronic session, so it could be interesting to see now if this becomes a resistance. For example, if I was to throw in 50% below there, if the market goes below there, let's just put in a 20 bar average as well, and back below the 20 bar average, it will be interesting to see what actually happens. Right, that's it for this morning. I will see you in tomorrow's reporting if there's anything to say during the day. Other than that, as ever, thanks for watching. See you in the next one.